since gold was, I think, 3,600, 3,700. Since silver was 40. A lot of these stocks are back down to where they were when silver was 40, even though it's 50. And they're just so scared because, well, it was 54, so it's going down. So what? It was 54 for like a day. I mean, if you took that 1 week out, we'd be at the highs. I mean, where we are right now is, a month ago, this would be record highs for gold and silver a month ago. Yet there's so much bearishness among investors. And there's not nearly enough bearishness among crypto investors. They're completely complacent. They're happy as clip. They're not worried at all that Bitcoin is going down. They think it's on sale. Hey, it's $100,000. It's on sale. On sale, you're buying nothing and you're paying $100,000. The sale is on gold and silver. And where the sale is whatever you would buy if you just sold your Bitcoin up here. But people don't want to sell it so much that they're going to borrow against it, where they're gonna sell it. It's just going to be sold out from under them at a much lower price than if they just sold it right now. So get your gold and silver, buy these mining stocks.
The precious metals market is once again testing the patience of investors. Despite gold holding near $4,000 and silver hovering around $50, sentiment has turned surprisingly negative. Many are interpreting short-term pullbacks as the end of the rally, forgetting that corrections are a natural part of any strong bull market. A few weeks ago, these same price levels would have been considered record highs. Yet, fear and doubt now dominate investor psychology. Meanwhile, the real sale is not in digital tokens or speculative assets. It's in the mining sector, where valuations have returned to levels seen when gold and silver were significantly lower. This disconnect between price action and perception is where long-term opportunities often lie. Peter Schiff, an economist and market strategist renowned for his emphasis on sound money and fiscal discipline, has long maintained that gold serves as the ultimate hedge against political and monetary distortions. His analysis reminds investors that while cryptocurrencies promise innovation, they cannot replace intrinsic value. Gold and silver are not speculative plays. They're monetary anchors in a system built on credit expansion and debt monetization. As central banks continue to inflate and manipulate markets, the fundamentals behind tangible assets strengthen, not weaken. The reality is simple. Short-term traders may see volatility, but long-term holders are witnessing the foundation of a historic revaluation in precious metals. Those who understand the difference between noise and value are preparing for what comes next, a sustained move that could redefine wealth preservation in the decade ahead. Now, we present the clips from Peter Schiff's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
How much the price of gold had risen between the conference a year ago and the conference this past week, and in particular, the gold mining stocks, because it's really a conference dominated by mining stocks. Almost all the exhibitors in the exhibit hall are gold and silver mining companies, with a few others, thrown in there, but the vast majority are mining companies, and pretty much all the attendees invest in gold and silver mining companies in addition to the physical metal. And, given where we were, I expected even more enthusiasm than I saw. Yeah, I think it was a little bit more upbeat than it was a year ago when there was a lot more despair and frustration. And of course, a year ago was a great time to be buying gold and silver stocks. But I heard a lot of people talking about taking profits, selling. There was some worried people about the drop. Gold had almost hit 4,400, and they're talking about that big drop, and maybe it's going lower, which of course is what happens in a bull market. You get these violent sell-offs to scare people out. But the bottom line is gold's $4,000 an ounce. In fact, it closed the week almost right at $4,000 an ounce again. Yes, we've traded below. We haven't traded below 3,900. The lowest I've seen gold was in the lower 3,900s, 3,920, 3,930. And it's gotten above 4,000. I think it got to 4,020, 4,030 this week. It's been hanging out at that area. This is very similar to the way gold behaved when it first broke through 3,000. Yes, it wasn't a line in the sand where gold didn't go below 3,000, but it didn't go much below 3,000, and eventually it took off and then went above 4,000. I think we're doing the same thing now. I think we're forming a base right around 4,000, and before you know it, we'll be at 5,000. But meanwhile, a lot of investors aren't going to own gold for that ride because they're getting shaken out now because they're getting so nervous. Since gold was, I think, 3,600, 3,700. Since silver was 40. A lot of these stocks are back down to where they were when silver was 40, even though it's 50. And they're just so scared because, well, it was 54, so it's going down. So what? It was 54 for like a day. I mean, if you took that 1 week out, we'd be at the highs, right? I mean, where we are right now is, you know, a month ago, this would be record highs for gold and silver a month ago. Yet there's so much bearishness among investors. And there's not nearly enough bearishness among crypto investors. They're completely complacent. They're happy as clip. They're not worried at all that Bitcoin is going down. They think it's on sale. Hey, it's $100,000. It's on sale. On sale, you're buying nothing and you're paying $100,000. The sale is on gold and silver. And where the sale is whatever you would buy if you just sold your Bitcoin up here. But people don't want to sell it so much that they're going to borrow against it, where they're gonna sell it. It's just going to be sold out from under them at a much lower price than if they just sold it right now. Buy these mining stocks. So there's a lot of opportunities right now in the mining space, and they've improved significantly over the last couple of weeks as a lot of fear has gone through the market as a result of a correction that barely reduced the price. You know, we corrected to 4,000 gold, not from 4,000. And silver has corrected, and it's almost 50. So it's a very, very strong market, and the strength is being greatly underappreciated, even by the diehard gold bugs and silver bugs. And so when you have that kind of skepticism among the true believers, just imagine what you got out there among the investing public at large. And I said from the beginning that the Trump tariffs are unconstitutional. I mean, it's really a no-brainer. You know, if you know anything about the Constitution, you know, the power to tax is vested with Congress, specifically the House of Representatives, because all revenue bills have to originate there. And tariffs raise revenue. I mean, and the Constitution refers to tariffs as taxes. I mean, that's what they are. And Trump just can't go around slapping taxes on people because, you know, remember, the whole country, taxation was a big part of the American Revolution, right? We didn't want King George taxing us. Well, we don't want the president taxing us either, right? We wanted the representatives of the people. We wanted our own congressmen from our own districts to tax us. And then if we didn't like the taxes, we could vote them out. Every 2 years, all of the House of Representatives are up for re-election. That's why the founding fathers said that's where taxes have to start. If you're going to raise taxes on people, then you're going to go back and explain why you did that to the voters every 2 years. Because remember, the senators were not elected by the people. They were appointed by the state legislatures. So they didn't answer to the people. The president was elected by the Electoral College. He wasn't answering to the people either. The only body that was directly responsible to the people and had to face re-election every 2 years were the House of Representatives. And so our founding fathers said that's where all revenue bills must originate. Originate with the representatives who are most responsive to the people and are going to be held accountable by the very people that they're taxing. So that is the basic concept, right? And the revolution, no taxation without representation. We want our representatives to tax us, because if we don't like it, we can vote them out and get some new representatives to replace them, right? But now Trump is just, throwing all these taxes, and, he keeps saying, we're getting rich. And he, again, on 60 Minutes, and he's telling everybody, and he's saying that if the Supreme Court strikes down his tariffs, oh my God, it's going to be Armageddon, he said. We're finished as a nation. It's a disaster. Like, the whole thing is riding on these tariffs. He said, if we lose these tariffs, we're going to lose trillions and trillions of dollars. It's not trillions, and we're not losing it. We're collecting it from ourselves, right? He still thinks we're getting all this money from China and from Europe. We're not getting anything. These deals that he keeps bragging about, this is all a bunch of nonsense. Right? He's making all these numbers up and pretending we're getting all of this money. We're not getting anything. Yeah, in some cases, foreign companies may be making investments in the United States, but they're not giving us their money. They own the investments.
The ongoing tariff saga represents more than just a policy debate. It's a window into how political narratives are crafted to mask economic decline. Each branch of government, from the Federal Reserve to the Supreme Court, becomes a convenient target when the system begins to crack under its own contradictions. The rhetoric of making America rich again is being undone by the very instruments used to enforce it: tariffs, deficits, and monetary manipulation. What was sold as a strategy for national prosperity has become an exercise in economic self-harm. The irony is that removing the tariffs would actually strengthen the economy, easing inflationary pressure and relieving businesses of artificial costs. Yet politically, that truth is inconvenient. It's far easier to blame economic weakness on the courts or policymakers than to confront the structural problems created by overreach and debt dependency. The real cost isn't measured in tax receipts or trade balances. It's the erosion of confidence in the rule of law and sound economics. Each emergency becomes justification for expanding executive power, diminishing accountability, and distracting from the larger issue: a nation living on borrowed time and borrowed money. Let's get back to the interview.
Mondami is going to basically blame the continued problems in New York on the fact that he couldn't fully implement his communist agenda because he was blocked by the governor. Trump is getting ready to blame the Supreme Court, right? Because he's already saying that if the Supreme Court doesn't uphold his tariffs, we're finished. It's going to be a complete disaster. The economy is going to collapse. It's going to undo all this great stuff he did. And it's, and he even said that there's no way the Supreme Court could do this to America. They couldn't destroy our economy. They couldn't send us into this kind of, downward spiral and basically destroy the whole economy, by setting aside this wonderful thing that I've done, right? This great thing that's making us rich. Our whole economy now is dependent on these Trump tariffs. And if the Supreme Court takes away this great thing, this gift that Trump has given us, then that's it. I mean, we might as well just, pack up our things. The whole country is going to implode, right? Let's just, leave, right? Now, obviously, that's not the case. I mean, we clearly can't be dependent. We've only had these tariffs for a few months, and they're not making us rich. The reason that there's a case before the Supreme Court, the plaintiffs in the case are importers who are paying the tariffs, and they don't want to pay the tariffs. And so they filed a lawsuit saying these taxes that we are paying, we American importers are paying these tariffs, and they're unconstitutional because the House did not enact them. And so we're going to court precisely because we're paying them. If the foreigners were paying them, right, if the foreign countries that these American importers were buying stuff from, if they just said, oh, whoa, Trump just put tariffs on, okay, we'll eat those for you. We're going to lower the prices by the amount of the tariffs. If that was happening, they wouldn't be complaining, right? If the foreign producers were paying these tariffs, there would be no lawsuits by American importers. The reason the American importers are suing is because the foreigners are not paying the tariffs. They're paying the tariffs, and if they pay them, they have to pass them on to their customers. And so they don't want to do that, and so they went to court. And in reality, right, if the tariffs are removed, that's actually a good thing for the Trump administration for two reasons. One, the recession won't be as bad without the tariffs because the tariffs are actually harming the economy. They are not helping it, right? The economy is bad. It would have been bad even without the tariffs, but it's worse with them. So number one, if the court throws out the tariffs, not only are they doing the right thing, but it'll actually be a net positive for the economy, right? But number two, and probably more important for Trump, it provides Trump with another scapegoat. See, right now, his main scapegoat has been the Fed. Too late, pal, right? That idiot, that moron, right? That low IQ person, too late, pal. He's got interest rates too high. He hasn't cut them enough. So he's already set Powell up to be the fall guy, right? We're probably already in recession. Look, we've been in recession for a while, and we'd probably know it maybe if the government wasn't shut down because, we're not getting a lot of data. And my guess is the data we're not getting is very weak. And so Trump is probably happy that the bad news isn't being delivered. But in addition to blaming Powell for the recession, say, look, everything was great, but the damn Fed screwed it all up. If they had only cut rates like I told them, right, because Trump has said he knows more than anybody at the Fed, right? He should really be in charge of the Fed because he's that smart. But unfortunately, we have these low IQ people, and they don't know what they're doing, and they haven't cut rates. So he could blame the Fed that if it wasn't for the Fed, we'd have a great economy. We had a great economy, but the Fed ruined it, right, by not cutting rates. But now he's going to have the Supreme Court as another scapegoat because the Supreme Court strikes down his tariffs. The economy is in recession. Maybe officially the numbers come out. And Trump says the Supreme Court did it. We had this great economy, and the Supreme Court pulled the rug out from under it. They put a knife in it by doing such a reckless and irresponsible thing as repealing, my signature issue, right? They keep saying that, hey, the Supreme Court should give Trump some leeway here because he campaigned on this. This is his signature issue. It doesn't matter. If his signature issue is unconstitutional, it's unconstitutional. You got to take the politics out of it. The Supreme Court is not supposed to decide whether or not the tariffs are good or bad. The Supreme Court is supposed to decide, are the tariffs taxes, which they are taxes, and does the president have the power to impose them? And I don't care if you want to claim it's an emergency, right? Because if the president can tax something simply because he claims something is an emergency, what are his emergencies? Fentanyl is an emergency. The trade deficits. We've had trade deficits for 50 years, and now the trade deficit is an emergency, right? Who knows what kind of climate emergency, right? The Democrats, hey, there's a climate emergency. Oh, the president is going to enact a wealth tax or whatever kind of tax because we have a climate emergency. What are we going to do? Well, the president now has broad powers to tax whoever he wants. Doesn't have to go through Congress because we've just declared a climate emergency, right? Who knows, right? Obviously, you can't concoct a fake emergency to try to usurp powers that you don't have, right? I mean, most of the Constitution has already been torn up and thrown out, right? But at least let's abide by this. This is pretty clear and pretty obvious where the taxing authority lies in the Congress and that a tariff is a tax. And in fact, when Trump is bragging about all the revenue that he's collecting, you collect revenue from taxes, right? The revenue is proof that the tariffs are a tax, right? Maybe if there was no revenue associated with tariffs, he'd have a better argument that they're not a tax. But of course, that's exactly what they are. But it's going to give Trump yet another scapegoat.
The political and economic theater unfolding today is a perfect reflection of a system built on distraction. Every crisis, every legal battle, every emergency is just another opportunity to shift blame away from the real issue, the structural decay of the U.S. economy. Tariffs, trade wars, and monetary manipulation are dressed up as tools of national strength, but behind the curtain lies a strategy of desperation. The government can't afford honest markets anymore. It relies on intervention, propaganda, and the illusion of growth to maintain confidence while the underlying debt-driven model continues to rot. The Federal Reserve and the Supreme Court now serve as convenient villains in this play. When inflation spikes, the Fed is accused of acting too slowly. When the market stumbles, the court is blamed for defending the Constitution. It's a political feedback loop, engineered confusion that hides the fact that America's problems are economic, not institutional. The more the leadership expands executive power, the further the country drifts from accountability. Tariffs, taxes, and monetary policy become instruments of control, not solutions to restore balance. The public is told the economy is strong, even as purchasing power erodes and productivity declines. Yet history always resolves these imbalances the same way, through revaluation, reset, or collapse. That moment is no longer a distant possibility. It's now a visible horizon. The only absolute protection is clarity, understanding what's happening before the next crisis decides for you. Share your thoughts on his analysis in the comment section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.